Hi, my name is Curt Covington. I've been asked to give a presentation on the current situation with tariffs in the agricultural space. So just a little bit of background on me. Again, my name is Curt Covington. I've been an ag banker for 45 plus years with clients across the U.S., with the majority of them in California. So I'd like to discuss briefly today just kind of the impacts of the current tariff and the tariff situation, which has been changing quite a bit over the last couple of days, and as it relates to particularly California agriculture. Let's start with what is a tariff. A tariff is just another word for a tax. So when it comes to agricultural commodities, most tax or tariffs are generally calculated and paid on a per unit basis. So if I were in the Midwest, someone were to be paying a tariff, it would be on a per bushel basis. If it was almonds, it would probably be on a per pound or a per ton basis. More importantly, when it comes to tariffs that we don't generally think about is the agricultural inputs that oftentimes are shipped into this country and used in agriculture. For example, it would be fertilizer, chemicals, and even more importantly, one probably we spend very little time on, but it's very important, and that is equipment. So I want you to think about John Deere as an example. John Deere today really is a technology company, but there are a lot of tractors and other types of farm implements that are imported into this country. And the idea oftentimes of a tariff is to protect intellectual property rights that, for example, John Deere might have. Oftentimes tariffs can be combined with quotas. We haven't seen those in recent years, and that's not the case with this administration. But it's interesting. The question is, who actually gets the money when it comes to a tariff? Well, that tariff is paid by the importing country, and when it's coming to us, it's actually paid to the U.S. Customs and Border Patrol Agency. A lot of people think sometimes it goes to the Treasury, when in fact it does not. What is the purpose of a tariff? There are many purposes to a tariff, but I would start by saying there's three primary ones. One is to encourage and protect domestic production, whether that's agriculture or even in manufacturing. Two is to protect the labor force. And three, oftentimes to protect emerging industries. And I would say that's really most important with agricultural technology, particularly becomes to labor-intensive crops and the amount of money that's being invested in replacing that labor with high-skilled technology. There's also this thing that you probably have heard about recently called reciprocal tariffs. Basically, a reciprocal tariff is nothing more than we're going to charge you for what you charge us. And it may be on different commodities, it could be on same commodities, but the reciprocal tariff is what this administration has been focused on. And generally, that's with existing trade partners. Why does a reciprocal tariff work and why is it so important? One, the whole idea, and this is what the Trump administration has been really focused on, and that is addressing trade imbalances and unfair trade practices. So as it relates to the retaliatory tariffs, it comes down to basically this. You agree to tariff this, we agree to tariff that. And generally, it's focused on key exports, like almonds or milk, for example. And so those of us that have done a lot of business, including our people listening on this call, probably a good majority of your clients are either in the almond or nut business, or you're doing a lot of business with dairies in the California sector. So here's a great example from the heartland. In March of 2025, China hit back with the original tariffs that the administration put on with a 15% tariff on American soybeans and other key farm products. By May, that list had grown, adding a 10% tariff on items such as sorghum, pork, dairy, a 15% tariff on corn, wheat, and chicken. These new tariffs led to canceled export orders and major slowdown in shippings from the United States. So when you look at that and say, well, what is the actual impact of that, Curt? And these are very rough numbers, and these are not coming from completely verified sources, but what you can suggest is this. About 21 billion of about 40 billion in U.S. corn and soybean export are being viewed at risk. So fair to say about 50% of exports are at risk. China alone was buying about 12 to 13 billion bushels in soybeans, and Mexico was buying about 6 billion in U.S. corn. the impact on both corn and bean prices have been noticeable. I would encourage you, if you want to see what that really looks like, you can just go and Google Chicago Board of Trade corn prices, cash corn prices. You can look at the future corn prices and see that the decline has been about $1 a bushel, which is the difference between a farmer in the Midwest making money this year and a farmer in the Midwest losing money this year. So why should a CPA care about the impacts of this? Well, number one, you first have to determine if your client is subject to the effects of any tariffs. And that means either on an export side, meaning the commodity is being exported to a foreign country, much like almonds are. So almonds, 80% or 8 out of every 10 pounds is exported. The question becomes, are they impacted by this? Clearly with China, they are. When it comes to other countries, there have been other countries that have picked up slack in the China exports. And so all those things are important to you to understand. So what are these commodities that as a CPA in California would be concerned about? Well, the ones most importantly would be nuts and dairy and probably some grains. But China imposed a 15% retaliatory tariff on dairy products, and that has a significant impact on US-based dairy production. Most people don't understand that most of the dairy products that are exported from California across the globe is in a dry product, so it's non-fat dry milk, and then that gets reconstituted for cheese, milk, and other dairy products. Here are some things that I would just share with you what happened in 2022 during the last Trump administration. 2022, and I hate to use China as an example all the time, but that seems to be the first thing that rolls off the tongue of every farmer. They imposed a retaliatory tariff on almonds, and it resulted in about a 50% decline in sales to China. It resulted in lower prices and financial losses of almost $875 million over a 5-year period of time. They also had what would kind of be considered a more less than transparent view of this, and that is the amount of market share that had been lost. When it came to China, they went looking for other places to buy their almonds. And you say, well, all I keep hearing is California produces 90% of the world's almonds. That's correct. They in fact do. But you can also buy almonds from Spain, Morocco, and Australia. And that's where they went to buy their commodities. And one of the things that we sometimes don't think about, and this is not a political conversation either way, it's not just about what you lost, but what it takes to replace a market share that you've lost. So when it comes to your clients, sometimes it's just not something that's on an income statement or something that has some financial impact that you can see on a balance sheet. Sometimes it comes down to lost opportunities. So when it comes to imported products, here's something to consider with more local trade partners. This is in 2022. A 25% tariff was placed on fertilizer imports from Canada. And in 2025, that equates effectively the same thing we have today to about a $100 increase per ton in the cost of fertilizer. So sometimes we just tend to sit and think, well, what's the impact on revenue side? You really have to think about what's the impact on the expense side. So there's also tariffs currently on steel and parts from China. Mexico increased the cost of building and repairing farm equipment in the U.S. And I say, so what does all this mean? Well, a lot of our steel imports come from China and Mexico, and all that steel goes into the manufacturing of John Deere equipment and other manufactured equipment in this country. The cost of that oftentimes get passed on to the farmers in terms of a much higher price for that brand new tractor. And in some cases, you see the costs have gone up almost 7 to 8% just over last year for a new piece of equipment. Finally, I think the most important one, when you think about tariffs, a lot of times tariffs are put in place, particularly in the space of agriculture more recently, having to do with ag technology. There has been a lot of agricultural technology that has blossomed in this country over the last 10 to 15 years. And this government, and really the federal government, but also the state government in California, has spent a lot of time trying to protect the entrepreneurs that are creating some of this agricultural technology. I go back simply by saying, if you go look at a John Deere tractor today and you go and buy what we oftentimes just refer to as a green and yellow iceberg, it's really not about the tractor because the engine hasn't changed much, the color of the tractor hasn't changed much, but you get inside that tractor and you're basically sitting inside a computer. And that's all protected intellectual property rights that the government oftentimes attempts to protect via tariffs. So here's the thing when it comes to tariffs in the ag industry. Oftentimes we have, the best way to view this is if there are two types of production in the United States when it comes to the things that you're most familiar with. One, there's permanent plantings and dairies. They are the most susceptible. And the reason they're the most susceptible is because there is really no flexibility. It's not like if almonds get tariffed that you can just pull those trees out and replace them with something else. Row crops, on the other hand, have a high degree of flexibility. I would encourage you, if you drive through the Central Valley, you'll note that a lot of trees have been pulled out, particularly almond trees have been pulled out, simply because the markets have been difficult, pricing has been weak. But that open ground that now sits there provides much more flexibility for those farmers, particularly when it comes to specific crops that are being tariffed. So I only say this, permanent plantings, it's not like somebody can say, oh, well, we'll worry about this next year. The problem with dairy and permanent plantings is those are permanent problems when it comes to tariffs. When it comes to what a CPA should consider in regards to these matters, here's the first thing that I would say when it comes to the impacts on budgeting and forecasting. First of all, I think it's important that your clients start budgeting. You'd be surprised. It would be fair to say in my career, probably 7 out of 10 of clients that I have, many of whom are very sophisticated in their operations, have very poor budgeting practices. They've never really felt compelled to do this, but as banks, see the stress of tariffs, one of the things that we encourage our clients to do, and I would encourage you to work with your clients on, is stress test pricing of commodities that are affected by tariffs. But then also stress test the input costs that are affected by tariffs. In that regard, I would also consider the impact of the client's operations in terms of what that stress would do to the repayment of their operating line. Oftentimes we look at lenders as just some unnecessary evil that sits out there, but the reality of the matter is it doesn't take much in the way of a decline in revenue, and it certainly doesn't take much in the decline of expenses to convert a business that was marginally profitable to one that has a marginal loss or even a bigger loss and is unable to repay their operating line with their lender. So most importantly, I think from the perspective coming from the lending side of the world, not the accounting side of the world, is the communication with that lender and the possible effects of tariffs is really important. And CPAs play an important role to helping them communicate what those effects are. Some places that I would recommend you consider is we can start by saying this: China is what China is. But if we start a trade war with India, and if we start a trade war with the European Union, although I see there was some movement on that yesterday, or we start a trade war with the Middle East, then the almond industry is going to suffer much worse than what they're suffering right now. So when it comes to trends to watch for, those are the things that you probably would want to consider. And I would say when it comes, again, to other industries, ag industries in the United States, no industry is immune from these tariffs, and it's really important to pay attention to what those effects might be. So here's what I would say in regard to that. This administration is very well aware of the fact of how important rural communities have been to his reelection, this administration. So I would say what you saw in 2022, you're likely to see if markets are impacted significantly or enough to where there is concerns in rural America, you will probably see some kind of a market facilitation program that is floated by the administration for key ag industries. We saw this in 2022. Effectively, it's a word no one likes to talk about, but effectively it's a subsidy payment. And that subsidy payment was intended to help farmers make it through a period of time for which the tariffs impacted their ability to sell their crops. I would not be surprised if we see that again in this go-around. While staying informed is kind of important as a CPA, it's kind of important as a lender, it's kind of important as any kind of financial advisor role, whoever it might be. Understanding that what can happen from policy perspective in a forward-thinking way isn't, really an ace in the hole for you as the CPA industry. I mean, for that matter, I would say anybody that can provide advice in these areas to any farmer will find themselves in a position where they're a leader in that industry. I encourage CPAs to stay in touch with their farmers in discussing these matters. Lastly, I think the key takeaway is this. No one really knows where all these tariffs are going to go. No one really knows what the global impact of these are going to be at this point. There seems to be just a lot of back and forth, particularly with regard to these reciprocal tariff issues. But I do know this administration is working quickly through a lot of these tariff arrangements. Here's where I would go if I were in your shoes, is the same place I go virtually every month. The first one is the USDA, United States Department of Agriculture, ERS, and that stands for the Economic Research Service. So just type in USDA ERS. It's a great source of information as it relates to every particular major commodity and industry in the United States. To the Kansas City Federal Reserve, the Kansas City Federal Reserve Ag Market Report and Outlook. So again, the Kansas City Federal Reserve Ag Market Report and Outlook. There's a publication known as the Farm Journal, and the Farm Journal is both online. You can also, they have a television show. It's an excellent source of information. It's called the Farm Journal. And then finally, Farm Doc, like DOC, like doctor, Farm Doc Daily, all one word, Farm Doc Daily, which is University of Illinois that covers tariffs, trades, and impact on farmers. So I thank you for your time and look forward to any future discussions we can have around tariffs.